Excited to be back for another live stream where we're focusing on answering questions regarding the Celsius refinancing solution from SALT. Today, I'm Hunter Albright, and I'm joined with Dan, who heads up our loan operations, Justin, who heads up our sales and business development, and Sean Owen, who is the CEO. We've had a great week of live streams where we've addressed questions and covered topics that are critical for Celsius creditors who are considering refinancing their existing loans. With the vote deadline coming up tomorrow, we're going to focus today on all Q&A that people have and questions they have around SALT Solution and how we can assist. Before we jump into additional topics and Q&A, I'm going to have Justin, if you can go over the offer that we currently have, and if there are certain areas that you can call out in terms of how it compares to other offers that are out there based on our knowledge, that would be great.
Excellent. Thank you very much, Hunter. So as a review, we're going to just highlight our terms of what we are currently offering. Remember, this on a case-by-case basis can change, however, in underwriting. But our offer is, to this day, structure of the loan is it's interest-only payments. The term is for 24 months. The pricing, which is our APR, is 11%. The fees are a 1% administration fee. And for clarification, we've gotten this question a ton. What does the administration fee apply to? The answer to that one is to the principal of the loan itself. There's no prepayment penalties or fees and no withdrawal fees in addition to that. Collateral requirements are 70% LTV, maximum LTP post refinance. There is wiggle room for interpretation between 70 and 80%. We are starting to get more clarification on as long as we're below 80%, we can probably service you. Final definition will come soon on this, but ultimately we're very comfortable in saying at least that it's very likely at this instance. Group pricing is interesting in itself. Basically, if we get more than $100 million in loans as a group for the Celsius creditors, 10.75% would be the interest rate, which would reduce the APR. If it was $125 million for creditors that came to us, it would be 10.5%. And for $150 million threshold, it'd be 10.25% APR. So these overall high-level terms are very competitive in our opinion. And there are some comparisons and contrasts that I'd like to bring up just briefly. It's important to understand that, and I'm not going to call out anyone specifically for sake of just making sure that we are being politically correct here. But ultimately, with Leaden and Figure, there is different things that I would ask everyone to do their due diligence on for themselves. However, we like to highlight a few things that SALT does that are different than everybody else. One would be in the stabilization feature that we have currently. Nobody wants to get liquidated. So ultimately, SALT gives the ability to stabilize your loan, and in that process, give you a floating period to make a decision on how to best manage your collateral and either enter back into the market or just keep it floating for an extended time period, as long as you can talk with loan ops in general, make sure that they're being well communicated with to make sure that your loan stays active and you don't lose your wealth, you preserve your capital effectively. I would say very clearly to make sure that everyone understands this specifically, that if you are with SALT, we are interested in preserving your wealth, not liquidating your loan. We're trying to have a win-win situation for all of our clients and all of our creditors. The interest rate is pretty obvious. I'll just point that out. I believe we're the most competitive in the marketplace right now for all the creditors abroad. And ultimately, there is some interpretation of things that we can do in the future to also, slightly reduce the APRs for all the creditors across the board. And those are really important notions since, depending on whatever loan structure type you have, at the end of the day, your loan will end up costing you less in the 2-year term. And don't forget, you can always pay off your principal before the 2-year term. So our goal is to, one, provide our creditors with an extreme amount of flexibility. Two, to make sure that we are obviously operating at a profitable juncture for the company, to where we, in dealing with the creditors, that is, so that way we can maintain our operations and be very sound in our business practices, but also give everyone the most competitive rates possible. And that's a distinct threshold where I think that we are highly competitive in general. I'll speak to some other things later on some other questions, but for the offer itself, I pass it on back to you, Hunter.
Very good. Thank you, Justin, for highlighting that. Sean, I want to come to you to comment. Justin had brought up the stabilization, and salt's been around since 2017. It's been through a lot of cycles in the market, and I know the stabilization technology has really come out of a lot of the learnings through that process. Can you give a little bit more background on sort of the benefits of stabilization and how it came to be?
Yep. So first of all, I can't wait to never use the word creditors again and just call you people or customers. Let's get rid of that, because it's just, man, been a long time using that word, and I don't think that's the appropriate one moving forward. So, I think the most important thing to recognize for the way we're looking at this is that we have a North Star, which we think is aligned at the product level with the pain point we solve, which is the last thing you want to do is have an unplanned event or lose your savings. And so we lose if you lose. That's the alignment of incentives. If you get liquidated and stomped out with the 10% fee in the middle of the night and no notice, which happens to people all the time in bad platforms, then we don't have a customer either, and you're not going to like us. We've learned for a very long time that doesn't work as a model. It's not sustainable in this environment with what the promise of the product is. So we continuously build everything we can around that. We're always thinking about ways that we can allow for more time and more flexibility and more optionality around that one central point, which is, if you are in a long position and need liquidity, we need to keep you there. And we don't want you to lose any money, because obviously you're not going to be happy about it, and we're going to lose as well. So we can go really deep on this topic, but I think it's important just to keep that in mind at the highest level. We don't benefit unless you do with the product.
That's great. Thanks, Sean. And before we jump into some of the additional topics, Dan, can you summarize the steps that anybody that's interested in refinancing a Celsius loan with SALT, what are the steps that they need to go through?
Sure. We've streamlined it as much as possible to make it as less of a lift as possible for each creditor. First step is to go to the SALT Lending landing page on our website, saltlending.com/Celsius refinance solution, and fill out the form at the bottom of the page for each of the loans that you have with Celsius that you're interested in us refinancing for you. If you don't have time, you can certainly aggregate them all into one, but it at least kicks off the pre-approval process, and a member of our team will reach out to you with next steps. The next step after that will be the team member will give you a special link to create an account with SALT. If you already have an account with SALT, no worries. Create a new account. We're going to use this for tracking, so we make sure everybody's kept in loop and up to date on the next steps. After you've created the new account, go through the ID verification process. Make sure you set up 2FA. And then wait for further updates and clarity on the voting process. And, we'll be sure to be in touch frequently to make sure that we're all in loop and on the same page.
No, that's great, Dan. And I want to reinforce, Justin and Dan have sort of summarized the offer as well as the process. And so if you have any interest at all, please go through those steps. We are doing individual underwriting per loan. And if you have certain circumstances or questions, it's at that point we can address them. And especially if you're in a jurisdiction that's not stated on our website, please go through the process. This situation provides some flexibility for us to be able to have direct conversations with you and work through the underwriting together. Sean, as we go through the process, we've had a number of conversations with the different, communities and groups about things that are important in this process, both from sort of the refinancing as well from the creditor perspective. Are there any things that you want to call out, I guess, that have struck you in the conversations that you've had?
I think the biggest one is just clarity on the process. So that's why we're really hammering this to death. We want to refine this over and over and over with everyone so that, we do have a page, we have a process. And if we're constantly looking to like integrate that with our normal flow so that this can be routine and quick. It is a large amount of work that will probably come up all at once. So it's the lead up that everybody's been waiting for to get out of this process. But at some point that day will come, hopefully sooner than later. And we want to make that part smooth so that everybody has certainty. There's nothing left to do. The biggest questions still are the ones that nobody can quite answer, but they're somewhat predictable and we can talk about them, which is at a certain point when the date is known, we will be scheduling time to sign documents. At the end of the day, anything we say can ultimately get tracked back down to us doing the best we can to describe these questions and update our knowledge base, but always rely back on those loan documents that are going to clearly state everything. The quicker we can get that in the place where you're looking at the same thing we're looking at, and there's no questions around what that agreement will entail. Some of the finer details being payoff addresses and known times at which the 2 parties and 3 parties in this regard, when we're working directly with Celsius, will be on the same page, the better. So everything we're doing is just beating a dead horse over and over and over to smooth that out. So systematically, we are far ahead of the curve. I do get a lot of questions around that. And I think the biggest one has been, when should we hear back from you? Is there anything we need to do left? We're going to be sending out surveys and emails and communications, but always feel free just to reach out. We are collecting all that, even if we can't quite get to you immediately because of the amount of people we're talking to. It will not get missed, and there's no bad questions. So the other biggest one that Hunter touched on already is, if you go to our website, there's a page, the sitemap, that tells you exactly where we clearly lend. For example, we're working diligently to get approved to have an office in Nevada. We can't wait to get launched in Nevada, but today we don't have that on our webpage. However, there are people who are going to fill out surveys, and we encourage you to, from every jurisdiction. We're working on ways to make that easier so that we can understand the full scope and demand globally. That helps inform us of exactly what that looks like in your situation, so that just because it's not clearly listed there does not mean we don't already have something in the works or the ability to service your request that you're bringing to us. I'll turn it back over to you, Hunter. We can go on a lot of those.
No,
that one's an important one.
No, I agree, Sean. That's great. And we're going to go to Justin here shortly in terms of some of the top questions that have come in through other channels and conversations. But before we do that, we got a question in from Sam where we mentioned that the interest rate will go down based on the group incentives. And it was a question about how much has been pledged so far. So, Sam, what I can share is that we have had an amount pledged towards at least to the 100 million. That's well over 50% of that target. And so that's changing daily. I don't know the exact number to date, but we are definitely been moving up there, and it's been fantastic working with a number of sort of your peers and other Celsius creditors in terms of those conversations. So we fully expect those thresholds to be met as we continue the process. Justin, want to come back to you in terms of, you had mentioned before some of the top questions that had come in from some of the Celsius creditors. Do you want to sort of cover off at least the top 1 or 2 in terms of what they are and what the answers are?
Yep, absolutely. So thank you, Hunter. So basically, it's been a wild few weeks, and I just want to be very explicit in the fact that we have had an amazing response for just a ton of questions that have been flooding us. And I'm just going to take the top 2 questions. We have more below that we can get to later or whatever. If you want to DM me or set up a meeting, please feel free to go ahead. But ultimately the top two questions that we have. Number one is not in any particular order, but the one I get the most in general is the stabilization explainer. So a lot of people have very interesting questions pertaining to this. Ultimately, Sean just had a very good explainer about this a minute ago, but just to add to what he said, on the stabilization itself, the most important notion is, one, we're preserving your wealth. Number two, and probably the most interesting of the three I'm mentioning, are essentially you have the opportunity to treat this as a stop loss. And so you have the ability, hypothetically, to even possibly increase your sats. A lot of people, might not participate. They're not traders or whatever. That's fine. However, this has been an overwhelmingly well discussed and thoroughly asked question about this. What does that mean? Well, what that means is that if you get stabilized, let's say you have a $50,000 loan, and I believe it's 110% would be, so like if you get stabilized at $55,000 or whatever, and you essentially get your collateral converted, then ultimately you have the opportunity to come back into the market. All you got to do is contact loan ops and say, hey, I want to go back in the market. Once you have added additional collateral, that brings you down to the 83.33% threshold. So at that junction, you can enter back into the market. If the marketplace has, if it happens to be at a lower price, then essentially you're increasing your coin stack. So it's a very interesting process. We're not exchange or anything like that, et cetera, all the different disclaimers that go with that. But at the end of the day, there is an opportunity to actually make the health of your loan even better, theoretically, if you are privy to doing something like that. That's a really, really interesting and mechanism that you can use to help increase the loan health and LTV of your loan in general. Stabilization, people ask about the fees themselves. Currently, we're in the process of discovering the last and final fee amount that we're going to give to the Celsius creditors and eventual borrowers. And so for us specifically on getting a number for that, we're working on that, and we'll get back to you all very, very shortly. We have conversations all in between about what percentages are, and we'll nail that here very soon. The next question is reverse margin calls. So essentially, a lot of people have asked, because they're trying to strategize about their loan, how they can utilize their loan to make sure that they have the ability to, like, some people have a strategy where they want to continuously pull back some collateral into their wallets. Well, with Salt, we give you the flexibility to do that. These what we call intra or instant transfers, we request it, and then you're able to. The word I use is scalp. It's a trading word. I come from a trading background, but basically you're peeling off the top of your collateral. So, for instance, an example: if you have a 70% LTV loan and your collateral or your LTV, goes down to 60% because the market increases, or for whatever reason, or you pay off a little bit of principal over a period of few months, you can take some of the collateral off the top, and you can bring it back to your sub account, and then eventually put it back into your wallets or whatever, essentially claiming that collateral back over time. And likewise, if you pay off just big chunks of principal or other matters, you can also take back the excess collateral in that instance as well. So those are two very distinct things that make Salt incredibly flexible and useful. So those are the top two questions. Thank you, Hunter.
No, Justin, that's great. And I want to build on what you've said and call out one other thing that has come up in some of the other live streams. And it's a real differentiator for Salt and benefit for Salt customers. And that's really that the collateral can be across a number of different assets. So, we allow, Bitcoin, Ethereum, Litecoin, stable coins, all to be sort of, pooled for your collateral of a given loan. And so that also helps sort of decrease the risk of any price fluctuations on any one currency in terms of the stability of your LTV as things going forward. So that's another thing is you will hear that we're looking to sort of consolidate loans into one. And that's one of the key mechanisms that we use to be able to do that, is allow people to pool their collateral into a single loan. And it has benefits for a number of different reasons. Sean, I'm gonna come back to you and want to sort of say, is there anything else you want to add just on sort of either the key differentiators for SALT's lending products, and what's most beneficial or to be considered beneficial for the Celsius creditors?
I think first I just have a quick note on one thing we've mentioned that we'll repetitively keep talking about also to cover the basis is the way that the rate disclosures and the pages work. We're doing the best we can to give you the most accurate information and a quote on the final fees and interest rates. However, those are kind of our higher limits. Of course, we want to beat them. And a lot of times we have to go state by state to finally confirm. So there will be a final sign off on all of that. The best you can do is rely on the fact that depending on now to when we actually get to the payoff, there could be changes in the rates. And you will know what they are in complete disclosure beforehand. So back to your point, Hunter, I'm kind of stuck on this because it came up earlier, really elaborating on the pitfalls of margin calls from my experience in the last, call it 8 years, where you think you're going to get a notification and you're going to have plenty of time to make your margin call. And a lot of the platforms or third parties, they'll accelerate that. So for example, there's a steep price, which we could call flash crash, or it could just be a significant drop in price, which is pretty common in crypto, and may just happen to show up at 1 to 3 a.m. in the morning your time. Now, your expectation should be that there's a period of time to cure, that you have proper notice around, and that's really important in the documentation. If you don't have that clarity, be careful, because there could be a huge penalty liquidation at a very low price that maybe you thought would be a different price than what actually happens at that point in time, and you won't have any notification. It'll just be bing, 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 done. So unfortunately, this happens a lot of times with people, and this goes back to my first point that triggered it. We don't benefit if that happens. We're not in the business of trying to get a one-time win on you because the market's volatile. But I can't say that that's true for everybody else, because that's a hard lesson to learn. And many people I know, including myself, have learned that the hard way. So be careful in the loan documents. We pride ourselves on wanting to make sure that we bring you back to that over and over and over. That the terms and conditions are there and they're known. And there is a system that we can show you and demo and prove the historicals of how many times we have executed those notifications and margin calls without that scenario playing out. And if there's one thing that is above all for me, it would be, I don't want to get surprised one day that suddenly what I thought was protecting my wealth actually destroyed it. And I worry that there are many platforms in the world, from DeFi to central platforms like ours, that don't really honor that, or that have something in the works that may surprise you. So we can go on to other topics, but I did want to just at least call it out. That's something we've worked really hard to continue to live by and build on top of more ways to make sure that never happens.
No, Sean,
Yeah,
Sean, that's an excellent point. Dan, I want to come to you. I mean, you lead all of our efforts and engagement with existing customers. Would love to get just your perspective on the stabilization and conversations with existing customers and how people have benefited and leveraged it in the past.
Sure. A couple great things to point out there. First of all, stabilization came out of the March 2020 crash at the beginning of COVID. We've been toying with this idea that we all know liquidations are terrible, and some liquidations are full and complete. If you trigger a liquidation at 90%, or you trigger a liquidation at 80%, it liquidates the loan, the interest owed, and you're out. And we know that's not what people want. Everyone that works with us is a longtime hodler of BTC or ETH, and they believe in the upside. And so what we wanted to work with them is on a way where we can protect our lenders, right? But also give people the ability to get back into the market, manage that wealth. And so we've had a lot of people who have had, with the stabilization feature, a lot of people, when leveraging it, if they aren't maintaining the same amount of BTC or gaining BTC, they're significantly limiting the amount of digital assets they might be losing. You're not going from, I had 10 BTC collateralizing a $120,000 loan, and now all of a sudden I have 0.8 BTC and a $1,200 loan. So, it's been a very beneficial product for everybody involved. And, it's something that we continue to build on and improve on. And hopefully one of the features we're rolling out soon, hopefully, I've been asking for it and working on it for a long time, but is the ability for borrowers to stabilize themselves, pick a price point where you want to just basically say, hey, look, I want to stabilize $10,000 on my BTC, or I want to stabilize, $20,000 on my BTC to kind of slow the price depreciation, and then be able to trade that back in as you want. So that should be coming soon. Secondarily to that, we also have improved the platform to a point where we have free and instant transfers once you have collateral on platform. So a lot of borrowers during a market downturn, what they do is they'll put some extra collateral in their custody wallet. And if they need to transfer collateral into their loan account, they can just move it over. They don't have to contact anyone at SALT. They can manage it all themselves. You can do it at any time of night, on the weekends, holidays. It doesn't even, no one from SALT has to be online. You just log into your account and you transfer it. Justin highlighted earlier, the same thing applies with reverse margin calls. If the market is popping and you want to get some collateral out of your account, you can transfer it instantly out of your loan account and into your custody wallet. And then you can submit a withdrawal from your custody wallet to a private wallet or another wallet of your choice. But those are ways that you yourself can help manage your own LTV, and you don't need to interact with anybody from SALT.
No, those are great points. So we've touched on the stabilization, and it's been a key feature for both individual customers of SALT as well as businesses. And back in the fall, we did roll out a new solution, our treasury management solution. Justin, can you give an overview of that, both how sort of companies that hold crypto as well as sort of mining companies can really benefit if they, that are interested, and if they are existing Celsius creditors that are more on the corporate side than the individual side?
Excellent. Thank you, Hunter. Yes, sir. So this is something that we're really excited about in terms of the ability to understand what this product really is based around. It's based around the ability to have continuous operational costs on an ongoing basis for a treasury management solution for miners specifically. So if you are a miner, come talk to us. We're very excited about it because the clarity I want to provide that's super important is not only do you have, with our partnership in Luxor, reduced fees on the pool itself. So anyone who's in that has maybe 10 miners to up to thousands of miners can get additional sats they can stack. But not only is there that, but on the cost to borrow, the APR, it goes down as your actual petahash increases. And the question is, why do I need petahash? Well, you point your petahash directly to the collateral wallet. That collateral wallet then changes the product structure a little bit in the way it's thought about on a risk management basis. The risk management of it now is a lot better because ultimately you're consistently every single day depositing more and more collateral into your wallets, which helps your LTV. So we look at it differently from a risk mitigation standpoint. The rates, like I said, come talk to us. We have, I can give you one pager on this, etc. But the rates have a significant advantage. So if you are a miner and you are interested in the TMS solution, please come talk to us. You can reach out to Nicholas.Perry@saltlending.com or Justin.Padola@saltlending.com. And we will walk you through this, give you a tutorial, a full presentation, give you the whole dog and pony show to show you how amazing of a product this truly is.
Oh, that's great. Thanks, Justin. Sam, thanks for your question as well. I want to sort of come to that. Sean, Sam is asking, can we pay down part of our principal with stablecoin over the term of the loan to bring down both our LTV and interest payments?
Yes, 100%. So I think what a lot of people choose to do that makes sense to me is that putting some stable coins up ahead of time before your monthly payments, and or just knowing that you are smoothing out the volatility and that you have the ability to make the payments that way. There's a few different benefits there, but that's definitely something you can do. And part of why we think the portfolio wallet works so well for people. So with Celsius, for example, the way I understand it, many people will get back both Bitcoin and Ethereum. Maybe not everybody, but the way I understand it, many people will. So that's something that you could add USDC in also, or your stablecoin preference, but that works really well for both the repayment and funding mechanism, and also for adding a bit more smoothness to the volatility in market swings. So that is definitely an option. No payments or prepayment penalties on any of that.
No, that's a really good point. I mean, really, I think the loans have been structured really to provide customers the most flexibility about how they pay them off and when, so that you're incentivized really to hold it. And Dan, actually, on that point, I want to come to you. We have had just great loyalty with existing customers. And their, sort of the refinancing of existing loans. Can you highlight a little bit about that process and what people can expect once they are SALT customers?
Sure. The refinance process is not completely automated. However, it is pretty straightforward. If the price of BTC goes up and you want to draw additional cash against the BTC that you have pledged, you simply email loan support@saltlending.com, reach out to the team, and they can walk you through the next steps. I simply just agree to updated loan terms, sign a new loan contract, and we disperse the money usually in about same day, if not one business day. So it's something we see a lot of borrowers take advantage, especially the back half of 2021 during that bull market. We had a lot of refinances, people just managing that LTV. If they started at a 50%, trying to stay around 50%. If they started at 70%, try to stay around 70%. And really just managing, that's one of the key features of SALT's platform is your ability to manage your wealth, right? You don't need to contact us necessarily to make a deposit or transfer collateral to manage your LTV. Once it's on the platform, you can move it around. You don't need to talk to us. If you want to withdraw additional cash, you just send us a quick email. We send you new loan documents to sign. We disperse cash to you. It's very simple, very straightforward, very flexible.
No, I think that's great, Dan. And, it had come up on one of the live streams earlier this week that, really the tool, the sort of crypto-backed loan is a great tool to manage your wealth. It's very much akin to what billionaires and the wealthy leverage, get cash out against sort of assets, whether it be companies or land or other sort of high value assets they have. And I know at SALT that we're really proud of being able to make that available broadly to the crypto market to help people manage their wealth very sort of smartly and intelligently in terms of how they can get the most out of their assets. Sean, I want to come to you with a question. I know we've in the conversations with a number of Celsius creditors, this concept of, an interest accrual based loan where sort of the interest rolls into basically a new loan each month in terms of topping it up. I know we've gotten that question a lot. Would love for you to sort of give an update on how we're thinking about that and what people can expect.
Yep. So just for some background for everybody, the concept is around the loan model and different ways in which you could structure the terms. As a comparison, think about a standard principal and interest loan, which would typically be the safest type of loan because you're making a commitment to knock down principal ongoing and repay the loan while you're paying the interest. Also then contrasted with an interest-only loan where you're looking to pay down the principal later on, more like a balloon. A question has come up to us in comparison to ask, is there an option for my interest payment to get refinanced into the principal amount? So we're rapidly exploring both that and a model where we can show people the contrast of a couple other ways in which that impacts your loan. A responsibility that we have before we just commit to anything is that we have to explicitly model all of this out, We have to be able to show you on any given date of the week, once we roll something out, what the full truth in lending disclosure and what the full expectations of what the term of the payments would be. The easiest way to think about that is if you've ever looked at the process of buying a home or refinancing a home, there'll be that part where you have to acknowledge that over 30 years, at the end of it, you're going to have a lot more in payments than the purchase price. We care a lot about following up with not only getting all of that done properly, but then running it through our business model, making sure that all of our current counterparties with state regulators and federal regulators know that there's a model change we're contemplating. So there is a little bit of time needed for us to be able to really check the box and make sure that we are offering things that are in your best interest. Truly meaning that we don't want to make a promise until we know we've got it completely checked out from every angle possible, and it's not going to cause anybody trouble. So the benefit of this particular product is that in an environment right now where you have not been planning on making interest payments or principal payments and you need some more time, this is a way to extend out that time frame, and a good one. It does come with some potential downsides depending on what the final terms and conditions are, which you should check if you're looking at this anywhere. And one of the biggest ones would just be that there's a compounding of your interest payments that will happen over time. And so it really depends a lot on how long of a horizon you're looking at. And we just want to make sure when we bring it to you that we're putting it into a very scalable model that's been pre-vetted and checked, so that we're not just making changes quickly. We're moving as quick as we can. We think it's a great option, and we're making a lot of progress on it, but we don't want to commit to it early or right now. Expect that as soon as we have an answer, we will make sure that that is known, because we know people are waiting for us, but I think we still have time on it, so I wouldn't worry too much on that.
That's great. Thanks for that overview. And as a reminder to everybody, we encourage you to go through the process that Dan had outlined, and that is going to the landing page, completing the survey, establishing a SALT account, and completing ID verification. And then we will have a member of the team get in contact you. If there are specific terms that you're interested in or questions that you have, that will be the opportunity for us to work with you through the underwriting process so that we can do our best job to help solve your challenge specifically in the best way that we can. Justin, I want to come back to you in the conversations that you've been having with people that are the Celsius creditors and those that are interested potentially in refinancing loans. The dates we've got sort of the final vote for the plan is tomorrow. What's the additional timelines or process steps that people can expect to go through?
Yeah, so unfortunately, it's a little vague, obviously, and the creditors understand the reason why. Obviously, there's a lot of ambiguity around the whole process. However, I can distinctly say this: we're coming up against a wall right now. It's tomorrow. That's when all the ballots will be, essentially counted. The votes will be looked at, etc. And they'll see people who abstain completely, and that'll be interesting to look at and see how those statistics kind of compile. But after that, essentially for us as a company, after the votes are tallied and we have all of the responses and we understand the data, either mid to late next week, we'll be sending out a letter to all of the to all the creditors who submitted onto our Celsius loan survey. So that letter will describe what next steps can look like, what you can expect from us, and what we can help each person do as we start sorting through all the submissions. So I want to stress this is very important. Please do not wait to the last second to submit if you want to do a loan with us, or refinance with us. So there's that. The next portion is if there is essentially a yes vote, or there is I'm not sure exactly how that works. I'm not going to speak to that directly, but if we move forward with this, ultimately in late October, there will be a inflection point where there will be effective dates being made if everything goes through. There is a lot of people who are we've talked to that have essentially want to defend their earn position, And so this is something that is important to note, that if you are defending your earned position, you're likely to have that collateral, or BTC or whatever kind of collateral that is held by Celsius in continuation pattern. So ultimately, if you're coming to us for a loan, you would need to, and this is this is asked all the time, how do I do that on a one-to-one basis when you refinance it into us? Well, at the end of that, at the end of, if everything goes through, if the subject to that, at the end of October, if that does indeed happen, then we are able to pay it off one-to-one. And then if you don't have any excess collateral, then you'll need to come up with the excess collateral yourself and then defend yourself in your earn claim. This has been a very hot topic question for the past 2 days, especially coming to the voting deadline. So those are the dates that we have in front of us that we can actually vaguely understand, and at very least have some kind of clarity about. But beyond that, it's a lot of ambiguity, and just want to be very clear that we don't know those things for certain. But that's currently what we're going with.
Okay. And we will continue to update everybody both on sort of the social media channels and do additional live streams as we get more clarity on the dates and keep people up to speed on the process. We are working through a number of different scenarios to be able to help expedite and make that process, those operations easier. Been in conversations to both look at how we might be able to do it on a batch basis, as well as be able to fall back on an individual basis going forward, really to help provide the most benefit we can to the borrowers in terms of a quick and fast settlement. Sean, I want to come back to you. We've predominantly been focusing on refinancing, and the refinancing solution is not only available to Celsius creditors, really, but to anybody out there that's interested in refinancing a loan. Do you want to give a little bit of an overview of that, and the additional offers that might be of interest to people?
I'll touch on one thing, that a question that comes my way a decent amount, and just to elaborate upon it. So we get asked the question periodically, how come SALT doesn't have some kind of yield product or earn product? Are you guys offering something like that? And what's important here just to describe is that we do continuously have offers to raise capital, both from the standpoint that we're looking for additional capital providers that lend and or have interest in investing in an earned product where you're receiving yield for lending out your asset. However, that's not going to be on the webpage ever right now. That's not something on the roadmap. And the reason is because as I'm speaking about this right now, it has to be known that we are not ever pitching, selling, or offering some kind of investment opportunity. That would be a general solicitation of an investment in our regulations we follow under, and a no-no. That's big reason why Celsius got in trouble in the first place, and we don't ever want to fall into that situation. So the process for people to reach out is, hey, I'm interested to learn more about SALT from a partnership angle or from an investment angle. We, of course, can always make time to talk about the strategy, the investment pitch for people, but it has to come from a reach out where we have a relationship. So we don't want to just put information out anywhere publicly about that. We want to get to know you, understand your circumstance, make sure we're not wasting your time, and then talk to you about the process. We'll confirm accreditation, or if you're a qualified purchaser, and some of the other due diligence issues, just to make sure that we're checking all of the boxes. And after that, you've clearly got an account with SALT. We've clearly built a relationship and we're talking about it. I'd love to have that conversation with you, and I have those conversations all the time. It's just something that we don't put out there in the public for the reasons stated. And in that regard, we never will, I don't believe, until we get to maybe some future where there's a public offering that's through a registration, which is a whole nother deal. So we won't even talk about it. So I just mentioned that because I do get kind of comments here and there, and to direct them the right way, it's helpful to know that you're interested in that, and to reach out, and we can have that conversation at the appropriate time in the appropriate way. What was the other question also, Hunter? Just things that we haven't touched on yet that we want to mention?
Well, let me go to Dan real quick. I wanted to cover off, we've done refis with other providers as well. Yes, there's an admirer of the t-shirt.
We're bringing it back.
Dan, do you want to cover off the additional refis we've done and really what the flexibility of the refi is?
Yeah, we've worked with a number of companies and clients in the past that had loans with other entities, BlockFi, Nexo, Celsius, to name a few, Cred even back in the day. So we've done these refinances before, right? We've done it on one-off basis. We've done it on sort of larger purchases when some entities were looking at, reducing their exposure to the U.S. lending space. So this is something we're familiar with and something we've completed. I know we've highlighted in the past that we've got all these nice features for users once they're on their platform, but we've also gone through this a number of times. We've worked with people, we've worked with other entities to help manage the dollar transfer, collateral receipts, set up the account, all the back office stuff that you need to do. So this is kind of old hat for us at this point.
Yeah, no, I think it's a great point. And Andy and Dirk had brought that up the other day when really sort of giving a bit more background about, right, having been around since 2017, how rigorous and stable the overall platform is, largely because of the collective experience that the company has had going through the different market cycles. And John, I think you were bringing up in an earlier conversation about how well tested the alerts and the margin calls and the notices are for customers, so that one, there's no surprises. People have plenty of alerts, ensuring that their collateral remains their collateral and it doesn't get liquidated. It's a big reason why the stabilization got put in place to begin with. Any key points that anyone wants to draw attention to, Justin, and if any questions that have come up that we haven't addressed in the conversation so far?
Yeah, good question. Let me go back here and check. So so commingling. That's a really popular one. I can take that one if we want to just kind of freeform it. But basically, I get just a tremendous amount of questions. And I think that it would be really good for us to answer what SALT does and doesn't do with your collateral in your loan. I mean, Sean, you want to cue that? I'm going to cue that one up for you, or
Yeah, go, John, go for it, and then I can sort of chime in as well.
1 second, sorry, I just had a ping on a channel. So really the term commingling is a concern for people for a lot of reasons. And typically where that comes into play is that if we have 100 different people who have entrusted us with us giving them a deliverance on the product we offer, and we were to then take all that money and go put it together, you start to have a lot of problems, starting with accounting, but also around controls and around traceability and around a bunch of stuff. So it's just a bad practice, and we don't do it. There's a lot of ways that you could get into that conversation in different contexts, but in general, it's just something that I don't know how much time we should spend on it, since it's something we don't do, versus, there's educational material there we could put out for sure, if that would be helpful. I am curious also just to know if there's anybody that wants to fire more questions at us and keep the flow going, because we can always go in the direction you want to hear from. We've got a lot of topics we can keep on talking about in a backlog, so we can take any one of these further. But I think that's another question. We did have a little extra time to run longer today, before we've had hard caps, due to the fact there's deadlines coming up and a lot going on. It's kind of a hard push. We're also wondering if it makes sense to switch over to a format for the end of the day where we just do the audio talk on Twitter. So it's same format here, but you're able to audio in and ask questions if that would be of a benefit, or if people aren't on YouTube. So that's an open question. But yeah, I don't know how far, maybe Hunter, if you want to touch on the commingling just to make sure we cover it.
Yeah, a couple key points I just want to make there about, actually what do we do with people's collateral? I think Justin's made this point in a number of conversations. I think one, we're very sort of empathetic in terms of the situation and the challenge everybody has but as members and active participants in the crypto ecosystem and community, we are really proud to be trusted with the collateral and want to be clear on what we do with it and how we manage it. So when we receive collateral for a loan, we move that into our collateral environment to protect it and secure it and to help manage the loan. We take a portion of the collateral to fund the loan, and then the remaining collateral stays within sort of our environment. And within that, the reason we take ownership, and it's important that we do, is it allows us to manage both the funding of the loan, and then most importantly, or a key aspect, is the stabilization. It allows us to convert it into stable coin when it's needed to, when we need to, when you request it, when the events get triggered, and then also be able to move it back into a crypto asset when you have worked with Celsius or with Salt customer support in order to get the loan back in good standing. A little bit of a...
Absolutely. Yeah, no, well said. And so, I get that question all the time. It's really a good question. It's the right question to ask, right? And I love that, hearing that, especially from sophisticated investors and people who are sophisticated in borrowing now because they've been through this experience. The due diligence they've been forced to learn, unfortunately, has been because of their bad experiences with other lenders. So ultimately, it's the right question to ask. And we are very proud to essentially disseminate the fact that we don't do and risk your collateral in we don't risk your collateral in risky strategies. Essentially, when you give us 10 BTC, you're going to give 10 BTC back when your loan term is done.
So there's been a question that's been dropped in here on the back of this conversation we're having. So I wanted to sort of address it. The question is, in case Salt goes through a bankruptcy, who owns the collateral? I know the history that Salt has lived through bear markets, et cetera, which is a testimony to the strength. But I still need to know and interested in knowing about the ownership. Sean, you want to take that one?
So I usually give the answer people don't want to hear, but it's the only thing I know how to do is to give you the most blunt truth that I can come up with and the way that I understand it. And as we learn, then we add to it and we upgrade. But the truth is, if I don't believe anybody can answer this question totally today, because a lot of these bankruptcies have not played out, number one. So there's a lot of case law that could come from this that hasn't really unfolded. A lot of lessons that are being learned, but maybe not translated into a clear understanding. And so the reality is, if you look at this case with Celsius, it ultimately is going to be the judge who is making a decision in a bankruptcy. And there is so many different elements that go into these. None of them are ever the same. None of them. Facts and circumstances matter a lot. Words matter a lot. Agreements matter a lot. And so it's, I think, a pitfall or something to be careful of, not to just assume that there's something that will solve this. This has been presented even recently with the failure of some trust companies and the failure of custodians. And, I think it's just really important to note that for our standpoint, we are rigorously doing everything we possibly can to avoid that, and had our deepest, darkest moments really being tested on this in 2022, just like everybody. And do not see a bankruptcy of the company being a good option in general, period. And of course, things do happen, but I would be really leery of anybody that can tell you that they've protected against bankruptcy or whatnot. There are a lot of trade-offs that go into speed, cost, security, you name it. And when you're talking about diversification of risk, that is also true. There's a spectrum, and if you lean too hard towards one avoidance of a risk, you could just expose yourself to another. So what I will say is this: we are constantly being asked this question. We have always been worried about this topic from day one. We've been asking ourselves, how do we make it a clearer answer of what happens if Bitcoin goes to zero? What happens if bankruptcies occur? What happens if you name it? And this is one of those questions where we have a roadmap of continuing to add new ways of distributing risk that we're constantly looking at. But I also feel it's really important to know that until the bankruptcy occurs and a judge makes a ruling, you just don't know. So we can do the best we can. You can do the best you can. Always go back to the agreements that people sign, more so than anything else, which is why we mention that pretty much every time we talk. And we're going to continue to take that feedback in, assess the landscape of the market, the regulatory market, the market in general, and we're going to continue to strive towards anything we can possibly do within reason that will provide that additional assurances for people. So hopefully that helps. It's just not something we can give an exact answer to because it's not knowable at the moment.
Yeah, that's well said. I just wanted to add on to that. Like ultimately, in my opinion, and being an entrepreneur myself, at the end of the day, what it really boils down to is who you're working with. And the longer and more battle tested and time tested you are, those are the companies I tend to go with because I can trust them better because they've been through the ups and the downs of the markets in my experiences, speaking for myself.
Yeah, and I want to add one other point that we've sort of touched on, but just to be clear, one of the ways that we are really working to mitigate that risk and to help mitigate that risk is what we do and how we manage the collateral. I want to go back to the point that one, we're not commingling collateral where the collateral comes in and we're sort of leveraging it for your loan. And the second point I want to highlight is that we are not then re-leveraging that collateral to make profit elsewhere. It stays within our environment against sort of the customer's loan who provided us the collateral. And so really work diligently to have transparency on that, as Sean mentioned, in terms of both our practices as well as our terms and conditions. And if anybody is ever unclear or does have a question, please communicate with us because we'd be happy to address that and talk through it.
On a totally lighthearted note, so I just can't let it go too far. I just want to speak to this. So somebody called out this shirt. Okay, like let me just say, first of all, I had to make a decision at some point in time because I used to wear the shirt, and it's pretty comfortable. I like it. It's a good shirt. You know, you go to around the house day off shirt. But I think it's really important also to note that this term goes way back. Okay, this is a good term. HODL is something I really believe in. I think it's a great meme. It encompasses a period of time for me that I cherish. I look back at it as like the golden days back in the day when it first came out on Reddit. And, you know, so it's I'm somewhat trolling. Okay. I'm somewhat trolling and just saying, you know, like we've got the salt stickers below it. We're this at a conference before, but on the other hand, I also don't just want to throw it in the trash and light it on fire like I thought about one time, because it's still a really good term. Maybe the color of the shirt needs to get changed or something. Nobody's got a trademark on this, and nor should they. And we shouldn't let bad actors come in and take a narrative of something that meant something good and then screw it up. I mean, a lot of what we're working on is to make sure that over time we let the facts come out and show that hodling never caused the problem. Okay. Neither did lending and a lot of the other things related to it. But if you don't know better, it sure looks like that due to association and conflation. So I'm not trying to like say, hey, let's go, but I am kind of trolling. So there it is. That out of the way.
Stay long, stay liquid, stay salty.
Yeah.
Dan, we had a question come in from Robbie about the new co-plan question. Let me read it out and then would love for you to respond. Led to believe in order to refinance, we need to opt for full toggle to crypto on the ballot. But then we don't get equity. Does SALT require that full toggle? Or can we supplement whatever collateral we get back by depositing enough crypto to ensure the full LTV is covered?
Hope that makes sense.
Yeah, there's a lot of ways.
I mean, it actually makes complete sense. And Robbie, I think you answered your own question. I love questions like, yeah,
easy peasy.
Honestly, you've got to do what's best for you, Robbie. If you want to diversify your claim and take some, liquid currency and take some equity in NewCo and potentially go after any claims that they might have when they pursue legal claims, hey man, have at it. All we're going to look at is what digital currency you're transferring to us, what LTV you come in at. Personally, I'm comfortable letting anybody come in under 80%. You just need to know the risks associated with that, and I'm happy to walk you through them. And you can decide where you want to start with an LTV. But the vote, it comes down to what's best for you, and we'll take it from there after entered your vote.
Yeah, and the mix of collaterals is what we had talked about earlier. I mean, it's one of the real benefits, and that we're proud to offer in terms of you being able to bring in a wide range of collateral types to help get to your target LTV, as well as to manage the stability of the LTV.
Yeah, just to clarify, the equity in NewCo is not a collateral type.
That's correct.
Yeah.
We only lend against digital assets.
This is crypto collateral.
I actually did pitch lending against the Cell token once.
All right. Well, I think we have gone through all the questions we have. Sean, Dan, and Justin, thank you for your time today. And thank you, everybody, for joining us for additional questions regarding the Celsius refinance solution. If you have any additional questions going forward, you'll likely find us in a Twitter space over the next sort of 24 to 48 hours. Happy to answer any other questions. Or please feel free to reach out to support@saltlending.com or sales@saltlending.com. Thank you, everybody, and we look forward to being in touch.